What is the difference between investing in a property via fund versus syndication? I'll answer this very frequently asked question today, but before we begin, a quick reminder that my videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. I will cover three key considerations for passive investors to keep in mind as they make that decision. Number one is diversification. As an investor, you have the opportunity to invest in a number of individual deals, let's just say 5 different apartments, for example. In a fund, you are effectively investing in a single vehicle that's invested in 5 different assets. In most cases, or actually in all cases, typically selected and curated by the fund manager. That allows you the opportunity to diversify across multiple properties, geographies, and operators via a single vehicle. Which leads me to point number 2. Efficiencies in reporting. Not only the monthly/quarterly reporting, but also the annual tax reporting and K1s. In the hypothetical example that I just shared, you could expect to have 5 different reports every month or every quarter providing a financial update, and then 5 different K1s, each of which may come with additional filing requirements. Whereas in a fund, you receive one consolidated report showing both the overall performance of the fund as well as the individual property performance. And at the end of the year, you will receive a single K1. And point number 3, there are a few additional considerations. For example, when you invest via fund, typically, in most cases, the fund manager is able to negotiate better conditions, and some of those savings are utilized to cover the costs of running the fund, but a portion of those are passed on to the passive investors, so they could be at least return neutral, but in some cases even better. There may be more flexibility in terms of the minimum dollar amount. Many syndications have minimums around 100,000. There are many out there with a lower minimum, but when you invest via fund, you have a little bit more flexibility to perhaps enter via a lower minimum, and you're also dealing directly with the key decision maker, which is the fund manager, versus 5 or 6 different lead syndicators. And you still get to benefit from depreciation that is passed on to the fund, and the fund then in turn passes on that tax deferral benefit to its investors. So I hope you found today's video helpful, and if you did, please like, share, and subscribe, and I'll see you at the next one.